Hello, everybody.
Hello.
Hello.
Hi. We can actually hear you.
We can hear you now, and hello, and thank you for being here. Welcome to Your Brand, Your Business. We're very excited today to have a special guest with us once more. We had two lovely ladies the previous episodes. Now we have a very handsome gentleman named Ernest Jones here with us. He's also a CPA, and he's here to help us kick off our tax month here on Your Brand, Your Business. So as you can see, today's topic is taxes. And we're actually going to be kind of doing we're doing kind of a brief overview, and then also hitting some of the stuff like what are things that content creators must know, and also taking some questions. So if you do have any questions, I'm going to go ahead and post a link in chat. Please respond to that Twitter thread. That way we have one kind of single place to look for all of us to answer those questions towards the end of the stream. Before we get into the actual meat and stuff of the show, I do have to go ahead and give our disclaimer, which everyone knows that, I wouldn't be doing my job as a lawyer if I wasn't just full of legal disclaimers. So we do not represent Twitch. These are opinions to our own. There are professional opinions, so they don't represent StreamerSquare or Loco or anybody else for that matter. They just represent what we think. At the same time, we are licensed professionals, all of us here. We have a CPA, financial planner, and attorney, but we're not your licensed professionals. We could be, but right now we're not your licensed professionals, unless you're actually a client of ours and you're in stream. And in that case, I apologize. Yes, if you have received an engagement letter from us, then we are your licensed
professionals.
Yeah. But unless you've received that kind of thing, we are not your licensed professionals. This advice is being provided for a general education purpose. We're here to kind of help you demystify taxes, if you will. We want you to be able to not be so afraid of taxes, because we want to make sure you're paying them, doing the things that you should be doing. And that's why we are having this show. We will give you our contact information later on, so you can figure out how you want to get in contact with us if it is something that you think we can help you with. But for right now, all of this is given on a general basis. If you do have questions for us, please keep them as non-detailed as possible. You don't want to be sharing your intimate details, especially your tax details, with everybody on the internet. So there's that. Again, if you do have questions, please go ahead and post them in that thread that I linked earlier. That way we have a single spot that we can kind of get all of our questions from. I know you're all excited about taxes, but we should kind of discuss about what we covered last week also. And for that, this is my favorite part of the show, where we turn to Galen for our awesome Dragon Ball-esque inspired, but not copyright infringing recap of the last episode.
I'm honestly still kind of thrown off by what Loco said first before we go on this. Our offices all do appear to have the same wall color.
So this is what I want to talk about. So I'm Ernest, by the way. Where do you guys stand on potentially having a professional service house, like a streamer house, but it's professional?
Oh, God.
You mean like a shared office space?
Yeah, I was going to say a co-working space.
Live together.
You realize that Joel has a baby and I'm married, right?
Yeah.
I have no problem with any of this.
I mean,
and I haven't heard a hard pass yet.
Meatball is smaller than all of my cats, so that probably wouldn't be much of an issue.
Let's table that discussion.
Okay, we'll put a pin in it.
But yes,
if you guys are willing to move out to California, it's a lovely day here. My wife's at the beach right now.
You can't really tell from mine, but mine's actually wallpaper. It's not. It's like this really old, janky felt wallpaper that we have just not redone yet. But yes, on camera, it all looks very beige, just like our personalities.
Exactly. All right. Well, let me work on this. Previously on Your Brand, Your Business.
Yeah.
We discussed. Yeah. Did you get the clip that time? So I don't have to every time.
I have to go back and do it. Yeah.
We discussed building professional relationships. We had Phelan on as a guest, and we went through some of the reasons that it's important to build professional relationships for streamers, as well as just generally some of the ways that have been most successful for us, and some very notable examples of ways to do it wrong. So thank you again for Phelan for telling us about some things that people have said to her, where it was like, wow, okay, you don't know humans, do you? And part of one of the things that we talked about is that for all of us, building professional relationships has been really one of the keys to our success on the Twitch platform for those folks who are streamers, for us in business. Even just the fact that this show is going on right now is all because we did a passably good job, at least, of being friendly, interesting people who realized that we might have projects that we could work on together. So it was a really fun episode.
Yes. Yeah. That is available as a video on demand on the StreamerSquare channel. So if you're not following the channel already, please go ahead and do follow. Make sure you're doing that to figure out. And that's where you'll see a lot of other great streams on this channel, including Stream Scene, where they just talked about the Twitch TOS, which, funnily enough, we had discussed earlier on Nerds at Law. So that's where I'm going to do the shameless self-plugging right now. This stream is called, if you can't tell from the title already, Your Brand, Your Business, which is this is co-hosted by me and Galen, and that's where you can find us, and we all have our own personal projects aside from that we'd love to have your support. But I know you're all here to see the star of the hour, the main man, Ernest. No one's here to see us, Galen. That's just the reality of it. Nobody's ever here to see us. Yeah.
I'm always here to see you.
We're just the best.
Yeah, that's true. Ernest is always there to support us. Yeah.
That's right.
Yeah. And bringing up questions that we don't actually want asked in the chat. Yeah.
Well, I'd always preface it. I always have a lot of hey guys.
Yeah, like for our community guidelines show that we spent the whole hour ignoring a pending Twitch lawsuit case, and then at the very end, Ernest was like, "What do you guys think about that case?" Right? So then, okay.
It's completely relevant.
Have you heard of Ice Poseidon?
Yeah.
Go.
It was a very relevant, yes, but we had spent it ignoring it. But anyway, now you guys get to do that to Ernest. Throw him all of your really butt-puckering tax questions on that thread. I'm going to go paste that thread again. Throw him your... Oh, thank you, old school gentlemen, for doing that. Do that. Throw him your butt-puckering tax questions so that we can see the sweat beads just dripping down his forehead and the white hairs growing during the stream.
I'm ready.
Yeah.
I'm ready.
We're ready. Okay, so with that, go ahead, Ernest. Let's go ahead and cover your introduction of taxes, and then Gail and I will jump in whenever we feel like we're not going to make a complete ass of ourselves with our input for taxes. But what exactly are taxes? What are the ones that concern content creators, being self-employed individuals, and let's kind of how do we determine the fundamentals of streaming?
God, we're sorry.
So, the thing about taxes is they're kind of everywhere in that you pay them, like some states have sales tax. Everyone's familiar with the big federal tax filing at this time of year on April 17th. You're going to file your taxes.
Less than a month.
Less than a month. You're going to make your payment with that. And then also you have employment taxes. So the two big things that is applicable to content creators or self-employed individuals is income tax and employment taxes. So
is one of you playing with a spoon very aggressively?
Not I. I just have a pen.
Okay.
I was, but Stream can't hear it. You guys can hear it, but Stream can't hear it.
Oh, okay.
Okay. Joel's getting revenge on everything. He's going to test me the whole time. But you got income taxes and employment taxes. And employment taxes you may be familiar with if you've ever held kind of a traditional job where you got a W-2 at the end, or you look at your pay stub, right? And the way I explain it is, I'm going to get paid, $1,000 these 2 weeks. And then you get your pay stub and you look at it and you see federal withholding, it's $250. Social Security and Medicare's in there for, another $150. That is the, or 75 rather, but that's the payroll tax or the employment tax. And when you are a self-employed individual, you pay both halves of that, meaning when you're an employee, you pay half of it. So payroll taxes are roughly 15%. On $100, you pay, or $150 have to go towards the payroll taxes, the FICA, the Medicare, et cetera, et cetera. So what happens is with that, when you're employed by someone, you pay half. That's your half. But when you're self-employed, you have to pay both halves of that. So that's kind of the thing that a lot of self-employed individuals, a lot of streamers, a lot of content creators that I've talked to don't necessarily have their head wrapped around, and as well, it's not something they're factoring into their calculation. The other big misconception that I wanted to talk about was kind of the U.S. progressive income tax system. So people like understand that there are different tax brackets, and they go all the way up to now 37%. But the misconception is once you're in that bracket, not all of the income gets taxed at 37%. What happens is you make, $10,000. And I think the first, Galen, you know this better than me because you're forward looking and I'm backward looking. The lowest bracket is still 10%, correct?
12.
Oh, 12%. Okay.
Is that for next year though?
For next year, yeah.
Yeah. So on $10,000, you're going to pay $1,200 on income tax. Then you graduate to the next bracket, which I believe is 15%. So then you make, $10,001. That $1 over the bracket threshold gets taxed at the higher rate, while the lower amounts stay taxed at the first bracket.
Oh, you know what? I was wrong. It is 10 for the first 10K, then 12, then 22. My bad.
Yeah, they didn't actually change the first bracket, but they upped the way the math works. Boring nerd talk. They upped the thing to jump to the next bracket. So let me look at the outline. Okay, and the next we talked about employment, income taxes, those being two different things. We talked about the progressive tax system. And then the other thing is a lot of it's language and understanding kind of what people are actually talking about. So the other thing is deductions and expenses are often used interchangeably, and they aren't the same thing technically. So a deduction is something that goes on Schedule A, and that's like charity or mortgage interest or things, that the government incentivizes you to do that is sole and separate from the operation of your business. So what an expense is something that you pay to do what you do as a self-employed individual. So kind of go to example, your internet expense, your utility fee, that you're paying every month for broadband access. I presume in most cases, you're paying for a higher tier package just because, you need that I've heard, you want about 10 upload just because you don't actually get 10 upload. And so, you're paying that extra fee for that. That's all an expense, because if you weren't a streamer, you weren't a content creator, you wouldn't have that expense, right? I've heard of an instance where a content creator paid for two different lines. They paid for just because they were getting throttled or some kind of issue with their other line, so that anytime it acted up, they would switch over to the other line. And again, that makes sense, right? Like if you can't stream and you're a streamer because you don't have broadband access, you're out of luck.
I never thought of it, but that makes a lot of sense. You always see on Twitter people getting like dicked by Comcast kind of thing.
Exactly, and
it's definitely worth, if that happens, once a month, it's definitely worth more than $100 to them or whatever it would be for the connection. Huh?
Yeah, it's like being unable to commute to your work if you had like a traditional real day job or something like that, right? So, and I've seen that too. I've heard of people getting business lines to their home instead. So because it comes with business service, business tier support and whatnot, and it's supposed to be like a much higher guaranteed uptime. Or I think the coolest one I've seen is people getting actual studios and having, commercial space which has the business service also. And I think it's kind of, let me backtrack a little bit to kind of cover, because Ernest threw out a lot of really great information there. So I'm just going to kind of give you a little bit of a TLDR. The progressive income tax system in the U.S. is essentially, if you make more, you pay more, right? At least that's how it generally works. Right now, it's important to distinguish what we're talking about today only applies to the 2017 tax year. What that means is this is pre-Tax Cut Jobs Act, right? Next year, when we do this show again 1 year from now for the 2018 calendar tax year, it's going to be a very different show, because there is a lot of change. There are a lot of changes that take place in 2018 because of taxes.
Who's excited to talk about QBI deductions?
Yeah, exactly, right? So, and we'll put a pin on QBI, because that kind of goes into later on when we discuss, should you form an LLC or should you form a separate legal entity? But for now, we're talking about self-employed, kind of if you're either if you have an LLC, it's kind of just as a disregarded entity. If it's just as a single person as a tax filer for the 2017 year. So in that situation, this is a progressive income tax. The more you make, the more you pay. But
as opposed to a flat tax where everyone pays the same rate, or a regressive tax where you pay more the less you earn.
Yes. I mean, like if you want to look at a flat tax, for example, in the U.S., sales tax, right? Sales tax is generally a flat tax because it doesn't matter where you go, it's always going to be the same percentage. And it's important, and I think like Ernest brought up before, it's very important to know that taxes really are all around you. No matter where you're going, you're paying a tax. A lot of states now, they charge sales tax on Amazon shipments or online purchases. You pay sales tax for that cup of coffee you buy at Starbucks. You pay sales tax for that Happy Meal from McDonald's or anything else, right? So everything has sales tax. Employment tax, you can't lower what sales tax you pay. You can lower to a certain degree what income tax you pay, and that's what the progressive comes. So you have different tiers. If you can lower your actual taxable income from one tier to the next tier, then you're just saving yourself from getting into that next bracket. And so, kind of like let's stick on that topic for now. Then the part we're not going to get into business expenses yet, but just kind of income. So what you're bringing in. Ernest, what do content creators have to be aware of when it comes to determining your income? And like that's kind of step number one when it comes to filing taxes, right?
So the first thing is, I always tell people this is the first thing I always say before anyone gets like a crazy idea. Your tips or donations, in my opinion, like professional opinion, I don't like that they're called donations, because then it gives people the thought, oh, I don't have to pick that up. And I'm going to go off on a quick story. So I was consulting with a content creator, and this person hadn't filed taxes or they knew that they weren't right for the past 3 years. And this person, I was working with them, and this person was going through the 5 stages of grief, because I informed this person that, you have to pick up donations or tips as income. And this person was like, no one else does that. Not a big deal. And how are they ever going to know? Denial. Then I send them the PayPal link that kind of outlines exactly, look, this is how you get your 1099K. Now, a 1099K, since most people use PayPal or Patreon, is generated once you hit a certain threshold. You have to have, I believe, 250 transactions in your PayPal account and 20,000 received, 20 or 20,000. I forget which.
It's 20,000, and I believe it's 200 transactions.
Okay.
Yeah. It's an and, though. Yeah.
It's an and. So you have to hit both of those criteria.
Yeah.
This person was very successful, and they hit that threshold. And so I send this person the link. They click it, and I say, that's your social, right? So that got filed. The IRS knows that your social received, X amount of income. So then it starts bargaining. Well, like how likely are they going to find out? And I say, I can't professionally tell you. I can't, I don't know why you haven't got one yet. But I think you are. Like, this is an issue. I'll do this for free. I'll tell you roughly what you're going to owe in back taxes. And this is where no good deed gets unpunished.
That's where you became his favorite person who's ever existed, right?
Yeah, it was great. I was just like, hello, sir, madam. My name is Ernest Jones. I've taken your K. I've done what I estimate most streamers tend to have in expenses. And for the past years, you're going to owe roughly $80,000 in taxes without penalties and interest. And this person was obviously fairly successful. You can kind of gauge what their income was. And here are the drafts. If you have more expenses or a big outlay that I'm not aware of, or the expenses look low, let's work on it. Did that for free. And that person was in the wind. Never heard from them again, because the person adamantly said, you don't have to pick up tips and donations. And that's not true.
Yeah. So this is where the tax law side of me comes out. Unless you are a certified 501c3 organization. That means you actually went through the process of forming a separate legal entity. Then you applied for subchapter 501c3 status from the IRS, and you got a letter back saying you are a tax exempt organization. I don't care if you call them tips, donations, meatballs, spot coins, whatever you want to call them, those are taxable, right? That's stuff you received. Here's a hint.
If they need, say, if you need to test it, go ask Tiltify.
Exactly.
If they'll set up a donation button for you, and if Casper laughs in your face,
well, even then, if you set up a charitable, if you set up a GoFundMe, for example, or whatever, you can go look at the terms in GoFundMe, because they're very specific about saying we do not offer tax advice, because they don't want to be the ones to tell you, no, your ass is not tax exempt, right? Even if it's for medical expenses or whatever, that is all kind of. I mean, there's some argument that that's a gift versus that's income or whatever, if you what have you, right? But
wait, Joel, I want to stop you there because you hit on another thing and I forgot to tell this. It's not a gift as well. Like, these are my friends and they're gifting me money. So let's talk about that for a second. So under the real circumstance, say you have like parent, brother, sister, or whatever, and you need some money, and they provide you with what's the gifting? The gifting limit's actually $14,000. They cut you a check for $14,000 as a gift. Here's the thing about that. That's truly a gift. You know, they're friends, patron, there's some kind of relationship there. And here's the thing, if they go over that limit, that's actually impacting the person giving you the money. In that circumstance, they have got to do something for their tax. I'm not going to get into that. It's not really relevant to the audience. Yeah. But here's the thing about it. Don't also come at me with that argument, because that's not a thing. Because whether you want to admit it or not, as a streamer with a link to your PayPal for a way for people to make give tips to you, or subscribe, or a Patreon page, or Game Wisp, or what have you, you've set yourself up as a business, and that's not a gift in that circumstance. It just isn't. I want to say definitively 100%. Anything generated related to stream or stream activities, that is income.
Yes.
And on that, even if you do not receive a form, you have to pick it up. That is the law.
Yes.
Go ahead, Joe. Sorry.
I was going to say, it's important here because it doesn't matter if you think it's a gift. The biggest thing is if the IRS thinks it's a gift, which, given this example, the IRS is not going to think it's a gift. So it's the same as what we talked about in like the Twitch TOS, right? Twitch says, wear what you think you should wear to the mall. Well, it's not really wear what you think you should wear to the mall, because you may go naked to the mall. If you do, I don't know why, but whatever, right? It's wear what Twitch thinks you should wear to the mall. Same thing. It's claim what the IRS thinks you should claim, because the last thing you want to be is the person standing in front of the IRS administrative board or the tax court or what have you, in the Wesley Snipes position, saying, oh yeah, I fled the country because I didn't realize I had to pay this much in taxes, and now they're in jail or whatever, right? Yeah. So and I think, like, for all those people that, well, how are they going to find out, right? So if you got submitted a 1099K from PayPal or Patreon, that means they got a record of it, right? So definitely in that case. Or if you didn't get a 1099K, you're still supposed to do it. Well, how are they going to find out? Well, it kind of shows up eventually, right? And I think that's kind of we're getting into statute of limitations questions here, right? It doesn't really, to put it fairly, or not fairly, but to put it bluntly, the IRS is not fair in how they kind of deal with the statute of limitations. If the IRS owes you money, you have 3 calendar years to claim it, otherwise it's gone. If you owe the IRS money, there is no statute of limitations, right? And that's crazy, because there's some violent crimes with statutes of limitations, but you owing tax to them, you owing money to the government, there's no expiration on that. They can come after you whenever they want.
And before, so there's 2 sides of that. So before people start looking stuff up and saying, well, they said, like, there's no statute, this isn't true. Technically, there is a 3-year statute of limitations for the IRS to come audit your return. However, if you have misreported your tax, the tax owed by 25%, then it's 7 years. Oh, and by the way, if they can prove fraud, and Joel will jump on me, and I'll get this right. Fraud is very hard to prove, because fraud you have to prove intent, right? But everyone in this channel now knows the rules, so they can prove intent now. They'll link it, so they've got everything tapped.
Yeah.
But fraud means you intentionally did not file an accurate return. And when it comes to reporting income, that's a tough thing to get to buy. You need to report all your income.
You basically have to be dealing drugs on the side and know that you're doing that, right? Where it's like, okay, you're clearly trying to keep this income off the table.
No, I mean, that goes for, like, if you see the tax cases that we've studied before, or I've studied before, like, most of them are, it would seem like a fairly innocuous situation, right? It's like a doctor in a private medical practice, and he just kind of had some different loopholes going around, and then he claimed it. So, like, the IRS is not very generous or merciful when it comes to looking at what your intent is. They're kind of like, it's almost a guilty and proven innocent situation where if they're dealing with
Joel, it absolutely is. This I'm working on an IRS audit right now, and I'm working with the agent, very nice person, but they gave me the quote that always, if they know this quote, it's always going to be a tougher audit. The burden of proof is on the taxpayer.
Yes.
Burden of proof is always on the taxpayer. So you have to prove your expenses. You have to prove your income. You have to prove everything on the return. And you have to do that to the satisfaction of the agent.
Yeah. And like, I don't practice criminal law, but even I know usually the burden of proof is on the prosecution. But in this case, the burden of proof is on the taxpayer, meaning you have to prove you're not doing something shady, which is generally a harder battle to have.
And this will be a tease to something we'll discuss in the future. But I'm all for being aggressive, and we'll talk about what that actually means when people say aggressive with your taxes. But income and underreporting income is not an area for being aggressive. That's an area for being foolish.
Yes.
Yeah.
Be aggressive in taking your deductible expenses. Don't be aggressive in hiding income. And so that's why we're kind of talking about now what qualifies as income for a streamer. And our show motto is "it depends," right? But in this case, it depends usually means put it as income before you actually kind of figure out a way to discount it as income. All right. So I know that there are some people who kind of figure out, like there was a question in chat, I just missed it, about regarding a charity donation or something like that, right? We'll get back to that, but and generally speaking, and this is kind of an aside, but if you are raising money for a charitable donation, don't do it through your own PayPal. Do it through a avenue such as Tiltify, or do it through by sharing a direct link to that the donation for that organization. Because what happens is if you raise that money from your PayPal and people are sending it to your PayPal, that's going to show up on that 1099K that we just talked about. So what happens in that situation is then you have to report it as your income, and then you take it out as you gave that charitable donation under your itemized deductions, which may or may not actually help you when it comes to your actual filing.
Oh, sorry, go on.
I was just going to say, like, if that sounded like a lot of headache, that's because it is a lot of headache. So
it is.
Yeah.
Best practice is, I wanted to write an article. Galen gave me the idea, like, you should write an article about charity streams and all that. And it was a great idea, and I never got around to it just because busy stuff happened. And the key takeaway of that was going to be exactly what Joel said, is that you do not want to be a custodian of those funds that you receive. You do not want to have any control over them. And what I'll tell you is, as soon as you get them, turn them over to the charity immediately. Like, talk to PayPal. They might be able to carve it out depending how you raised it. Like, hey, these amounts were for charity. I don't want this. This was supposed to go here. Can you back it out? I've heard of cases like that. And it's one of those things where an argument can be made. I'm not saying, that's for, you got to pay to find out that information.
Yeah. The rule of thumb, or not even rule, the analogy that I like to use to help people understand why someone, even if it's a friend or a parent, for instance, tipping you on stream is not a donation, is not a gift, is would they be giving you that money if you were not streaming and providing them with entertainment? And if the answer is no, which it is for everyone, like, then
unless
you're providing a service for compensation.
Yeah. Unless you're my mom watching the stream and this is how you're giving me birthday money or something like that, right?
And if you are mom, that's a dumb way to do it.
Yeah.
Yeah, you pay the PayPal fee.
Yeah, exactly. Come on.
100%.
Yeah, cut him a damn check.
Yeah. Right. But okay. And I should kind of take a little bit of a breather here, because I know it seems like we're getting pretty excited, and that's because we're all nerds at heart that get excited about this kind of thing, right? So if you like, it's weird. Other people think taxes, right? So, but we go taxes, woohoo, or something like that, right? Not quite woohoo, but like at least that's what drives our professional motivation, if you will, right? Like I'm the idiot that said federal income tax course. Yeah, let's sign up for that. Oh, that was really fun. Let's take another 5 courses in tax law, right? So, but Ernest is the one that even greater. Oh, CPA exam. Yeah, let's go ahead and do that. Right? I have to take 150 hours of tax courses and then or accounting courses, and then do how many different 4, 5 different exams?
Yeah. So the CPA exam is broken off into 4 parts, and you have to pass all 4 parts within an 18-month window, and they each have a pass rate less than 50%.
Yeah.
So it's fun.
So yeah, like I said, licensed professionals, not necessarily your licensed professionals, but we could be. For those of you who asked in chat, we will provide you our information later on. But having said all that, it may sound kind of overwhelming or kind of, like really, aggressive or kind of even threatening or horrifying, all the stuff we talk about. Because, and we don't really mean to make it that, but it's the reason it does sound that way is because of how serious all of this information is, right? So, if taxes weren't a thing, then nobody would deal with them, right? But because it's a thing that applies to everybody, that's why it's so important that you understand the taxes, or at least understand enough to know who to ask or who to turn to. And even if you do have somebody else filing your taxes for you, whether that's another CPA, whether that's H&R Block or some other tax preparation service, which you can quote me on this, don't go to H&R Block or another tax preparation service. Go to a CPA, right? And the reason, if you really want to know the reason for that, we can get into that later. But the reason we want you to...
The key thing is that the more informed you are, because here's the thing, if you go to an outside provider, it's very likely they're not going to know what Twitch is, they're not going to know what a bid is, yada, yada, yada. But if you have some common information that you're able to talk the language of the land with that professional, that gives you more time to get them up to speed on what Twitch is and why you're doing what you're doing and kind of your thought process. And by doing so, you end up, expediting the process and end up with a better product at the end.
Exactly. Yeah.
And so that's kind of the key thing.
Think of it as teaching you another language, if you will, because CPAs and tax attorneys, they're all, I could say this because we're among them, right? But they're a really nerdy bunch of dudes, right? They don't really have the same speak. We all speak English, but we don't really speak the same kind of English, if you will. So this is kind of helping you with that translation, right? Generally speaking, if you go to a CPA and say, hey, I provide entertainment online with my webcam and people watch me and donate money, they're probably going to be think it's something else, right? But so if you have to kind of, the more you know and the more you're better able to explain what it is that you do, exactly as Ernest put it, the easier it is that you will have in dealing with that professional and helping them to properly file your tax returns, right? And even doing it aggressively when it comes to filing your business income. So, wrapping it up, what do you need to include for your income? That's pretty much, let's just say, if you don't know, put it in. But here are some clear examples of what you do need to put in, right? If you have a day job where you're an employee, you'll get a form at the end of the year called a W-2. That you need to put in. If you get any form that has a 1099 on it, chances are you have to put that in. That includes, Twitch sends you a 1099 miscellaneous, or MISC, which stands for miscellaneous. If you have merchandise sales from DBH or from Teespring or whatever else, they send you a 1099. I don't know for certain about art sites such as what's the big one? I think Redbubble, right? Or if you're selling art or anything else through Etsy or whatever it is, I'm not sure what they send you, but I'm guessing and I'm pretty certain it's probably a 1099 miscellaneous that they send you to help you determine what it is that you've actually been paid for that year. Same goes for sponsorships. Usually if you've been, paid for an endorsement or for a marketing activation, they'll probably send you a 1099 miscellaneous also. If you were paid more than $600, they should be sending you a 1099 miscellaneous. And 1099Ks are from PayPal and Patreon, and what we kind of call your payment processors, if you will. Because Patreon doesn't pay you directly. It's the people that pay Patreon, or the people that are your patrons, and then Patreon is just the go-between for the financial transactional company, if you will. They give you 1099Ks, which are there to help you determine your income also. Ernest, am I missing any key examples here?
No. I can tell you, though, from what I've done this year, I have a few clients who've received Amazon affiliate 1099s, and they were the miscellaneous form. So I would expect most places to issue the miscellaneous as just non-employee comp. And on that, the reason it's so important to pick it up, my last thought on that is, what's going to happen is this form that you've received is also sent to the IRS. And so the IRS has that on file. They've matched it to your social. At some point, they're going to do a big matchmaking with their big server, full of tape machined computers. Not even kidding. They have,
not the fun kind of matchmaking.
yeah. And what they're going to do is they're going to look at the total income reported, and they're going to say, that's weird. Ernest had 1099s totaling 100,000, and he only reported 95. We're going to send him an automatic notice for that $5,000 gap and say, this is what we think your tax return should be. This is the update. Tell me why I'm wrong. The guy at the table, change my mind meme, right? That exact thing. Now, here's the thing about that, and this is the transition point, is that say you actually only did receive 95,000, but they issued you a total 1099s issuing 100,000, and it was, processing fees or something they took off the top. Well, in that circumstance, what I would do is I would report the full 100,000 and then show that 5,000 as an expense, just a merchant fee or a processing fee or something, and then you've netted to the proper amount, right? Yes. Because you're paying tax on your net taxable income. You're not paying on the gross revenue. You're paying on all of the money you earned less all the money you paid to earn that money.
Yes, and that's a great point, and that's why we say put it in anyway, right? Because chances are you can lower that number significantly through your business expenses and whatnot. So it's better to put it in and then try to lower that expense rather than putting in a number that disagrees with what the IRS got in their forms, because that's just going to set off red flags for them. And again, what we talked about earlier, the burden of proof being on the taxpayer. If they're seeing discrepancies already based off of the reported amounts and what you're reporting, because you said, well, that should be net and whatever, it's not a great idea to do that, right? You can kind of you can bring up that stuff later. Payment processing fees are a great example of what are some expenses that you can deduct and you should deduct. And that's actually a good segue into our next section, which is where don't be stupid, don't be aggressive, or don't be aggressive in trying to deal with your gross income. Be aggressive in doing with your business expenses, right? And again, Ernest brought it up earlier. People use deductible and deduction and business expenses kind of interchangeably and somewhat erroneously, but really what they are is a deductible business expense, right? So you're deducting, you're subtracting from your income because of this expense that you paid. Well, there's a key test that the IRS uses to determine, is this a qualified business expense? Ernest, what is that test?
So it is known as the ordinary and necessary test. And I'm going to go on my standard spiel. I think there are some potential clients in the chat. I don't know. So I apologize because they've heard me say this before. And I say this to everyone. It would be impossible for the IRS to explicitly list what a valid business expense is for every business that has existed, currently exists, and will exist in the future. Twitch really wasn't a thing. It certainly wasn't as popular as it was now 10 years ago. I was on Justin. I was watching old NA or league finals on Owned, if anyone remembers what that is. Yeah. And there was another streaming site, and so Twitch became a thing, right? Uber wasn't a thing, Lyft wasn't a thing. So who knows what the future will bring? But it's impossible to say for this type of business, these are valid business expenses and these are not. It would fill up all of the Amazon warehouses probably globally if they did that. Yeah. So they created this test called ordinary and necessary, and it has a lot of case law behind it now. And the way I like to explain it is, it's not the clinical, technical definition of ordinary and necessary. What I like to say is it common to what you do in your field, your industry?
Yeah.
Is it helpful to the business in some way? Does it provide value?
Exactly. And this is actually all right, so we kind of make the IRS out to be this big bad, right? Which they can be. If you're on the wrong side of the IRS, they definitely are a big bad. But really, the IRS is a organization that needs to exist because taxes need to exist because government exists, right? So in this situation, if you're not on the bad side of the IRS yet, do whatever you can to make sure you don't get on the bad side. And then when it comes to something like explaining an ordinary and necessary test, a lot of the case law that Ernest was getting to before is they actually start trying to figure out, is this actually a ordinary necessary business expense, right? So some of the examples out there are quite egregious about what people try to get away with, but as long as you can kind of meet these two areas. Ordinary is the IRS kind of defines ordinary as common and accepted in your trade or business, right? So the IRS isn't familiar with what the Twitch trader business necessarily is, because I don't know how many IRS auditors out there know what Twitch is or are watching Twitch, right? Because I mean they're extremely swamped. If you want to talk about people who are probably stressed to the max, that's people who work for the IRS, right? So as long as it's common and accepted in your trader business, and necessary, meaning necessary is something that's helpful or appropriate for your trader business, then that is what can be qualified as a business expense. So you'll see a lot of people online around this time of year arguing, are subscriptions to other streamers an ordinary, or are they a deductible business expense? Let's just go down the panel here. Galen, what's your take?
Absolutely.
Ernest,
they absolutely are business expenses.
So I will disclaim, I have not gotten into an argument with an IRS agent regarding this, but I think it is. And I'll give you the logic as to why.
Yes.
Okay. Is it common?
Yes.
Oh, sorry, go ahead.
I was just going to say, mine's also a yes, right? So if this is American Idol, boom, 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 subscriptions to other streamers, you're going to Hollywood, right? So everybody said just voted yes on this. All right. And now Ernest is going to give you the explanation why. Yeah.
So is it common? Do other content creators subscribe to other streamers? Yeah, they do. Absolutely. Is it helpful? Well, why would it be helpful? Part of being a content creator, I would argue, and again, not a streamer, so I could be completely wrong, but a large part of it is community building. And by subscribing, the dirty word of networking, right? of creating kind of like, oh, I go check out this streamer, we're done, we're gonna raid this person, him, her, I'm a subscriber, I have the emotes, I'm a fan of their content, check them out. I think there's some crossover in terms of what they do and what I do, and therefore it's a valid business expense. I would argue donations, even though we're not supposed to call them, that's the language of the land, to other streamers saying, hey, what's up, is also a business expense. I mean, what do you guys think?
I mean, go ahead, Gabe.
Within reason.
Within reason. Yeah,
within reason. Yeah, you don't want to be like surreptitiously. You don't want to be like, I don't know, supporting someone's entire livelihood via tips.
Yeah.
And say like, oh yeah, it's just a networking expense, but buying bits that you use when you're watching other streamers, or even giving them a tip via Streamlabs or something like that, definitely. And the problem I have, again, we keep saying that it depends, within reason, that kind of thing. It can be, and it is at some level. And I mean, for my business, I count, like, if I count bits that I buy as a business expense in the proportion that I use them on people who might be good clients, or like, or with current clients or things like that, but not like if it's someone who's a friend who I don't think is who I'm not like thinking this person could be a client kind of thing.
Yeah.
So traditionally, a traditional business model, you would view that the equivalent of buying gift cards for good clients.
Yeah.
Mm-hmm.
Only, 50% is deductible? No, that's for meals, right?
That's for, meals and entertainment, but this isn't considered. This is like small office gifts, so that falls under different rules.
But there's a limit, right? There's a limit on how much you can deduct.
Yeah, those it has to be de minimis.
Yeah,
I think that's $100.
Yeah, that's the marker I've gotten, is keep it under 100.
Yeah, so either way, like that gets subscriptions, definitely, right? Tips to other people are that gets into a little bit of a gray area, and to me, like, that's always just, well, do you want to have to explain that in front of the IRS, and how likely do you think they're going to agree with your argument? That's where it comes from, for me, from a legal perspective. So that's why for me, that's a big, it depends, but definitely subscriptions, because that's still networking, that's business development, what have you. And it's also important to point out that these ordinary and necessary expenses does not mean that they're required, right? It doesn't have to be. The word that the IRS uses is indispensable, but it doesn't. And the word that kind of means, like, is it a required expense? No, because subscriptions aren't required for you to be a streamer, but it doesn't have to be a required expense. The fee that I need to pay to maintain my my licensed for as an attorney. That is required for my industry, right? But that doesn't mean that if I join a local voluntary bar association, that is not required, but that's still an ordinary and business expense that's deductible to me in my legal practice. It's the same for streamers. Just being part of subscribing to other streamers, it's not required, but it doesn't have to be a deductible expense.
And at least, and one thing that I consider in the favor of subscription specifically is that there's a set amount, right? Like bits is harder because you could do theoretically millions of dollars or a cent, but with a subscription there are the set amount, so it's like okay, this is an accepted industry standard kind of thing, which I think helps a bit.
Yeah, I think it does. Like it all goes towards like just worst case scenario would be imagine that you're arguing in front of a tax court judge, right? And if you have to convince somebody else what it is, like it's probably easier to convince them that it's common practice for me to go around subscribing to even if that's 50 other Twitch streamers, right? That's common networking. But is it ordinary for you to be tipping, $1,000 every single week to the same person? That's probably not as ordinary or necessary, right? And like,
so Joel, the argument I would make, and I'm being serious, the argument I would make is it's a bad business decision. Absolutely, in my opinion. Yeah. Right. But do people make bad business decisions?
Yeah, constantly. I do all the time.
Right. Yeah. So the next point I would make to the judge, and I'm not saying you should or should not do this, to be clear. But the next argument is
disclaimer.
Yeah. Well, think of it this way: I pick it up as an expense. That streamer has to pick it up as income.
Yeah.
So for disregarding bracket differences, the IRS, assuming that other person picked it up, and I have no control over what they do, I think they should have, the IRS is still made whole.
That's true.
So that's an argument. Now,
yeah.
And so that's the logic behind it. So
as their accountant, if you know the rough bracket that they're paying in, would you be responsible for any arbitrage there then? If you were in a way higher bracket, passing it down, or I guess in a lower bracket, passing it up the line kind of thing?
I would
in the wrong direction.
Yeah. I would not be. No, because the argument is it's a business expense, and you say like, well, why'd you give streamer X $5,000? I thought if I did that, we'd be able to play a game together. They have 5,000 more concurrents than I do, and that I would get flow down from that. That was the logic behind it.
Yeah, I mean,
that's valid. Like that seems like that's a terrible idea from a business perspective.
Well, I mean,
by the way, guys, this is a very specific argument that I don't know is adding more right now.
Yeah, I think
to the general audience.
I think the takeaway from that is again, my point was if you're going to argue it in front of somebody, how likely is it that the argument is going to be accepted? And in the end, again, it's important to state it doesn't matter what you think; it matters what the IRS thinks.
Yeah.
Right? So,
sorry. Is this one of those fun like?
Yeah. This is a fun potential case study, right? This will be for like your brain, your business after dark or something like that. If we had some sort of like B-roll or some other after bonus segment where we were talking about stuff.
Yeah, what would be a valid business? That's something that could be, and I'm not even kidding. We could talk about that. I could throw out scenarios for
let's not.
Yeah.
Let's not on air.
Yeah,
I am interested in it personally. Let's not on air.
Okay, but for these business expenses, how are they going about claiming them, Ernest?
Yes, so we talked about kind of this is what you need to do, blah 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 blah. Well, where does it all end up? In most cases, if you're a small content creator, and by small, I mean you are netting, and by netting, I mean revenue less expenses, probably less than 30,000. You don't even need to be thinking about more complicated tax structure. So most of it's all going to end up on Schedule C. Yes. And the name of that form is, profit or loss from business. I probably dropping a word somewhere there. But that's essentially what you are. That's why it's called your brand, your business, right? Streaming is a business. So you put all of the activity there. And it's a pretty straightforward form. And I say that with all of my knowledge compared against other IRS forms. So that's one of the more simple ones.
Yeah. I actually just linked the Schedule C in chat right now. It's a PDF. If you want to go ahead and look at, chances are, if the IRS has its own category listed for it in the Schedule C, that's a ordinary or necessary business expense. You don't even have to worry about like claiming or explaining that one, right? So, for example, some of the stuff that's listed in there: advertising, commissions and fees, insurance, interest, employee benefit programs, which probably doesn't apply here, legal or professional services, office expenses, right? Travel, meals, and entertainment. That's a big one for content creators. So all of this stuff, if it's in there, that's a good way for you to kind of start thinking about what did you actually spend on your business so far this year. Can those expenses fit into there? I mean, like when we're talking meals that you ate to kind of on a day-to-day, like you can't deduct your lunch from Panera if you weren't doing something business related. But those are your kind of categories that you can list all of these. And this is when it comes to filing your 1040. Your 1040 is your tax return. That's the form number for your tax return. Schedule C is a supplementary form for that 1040 because you as a self-employed individual need to fill this out also. My advice, hire someone like Ernest to fill this out for you. But that still means you need to figure out what you actually spend, because Ernest, unless you're paying Ernest his hourly rate to go through your credit card statements, which he probably could, but you're going to end up paying a lot, or for any CPA to do that. It's best for you to figure out what you've already spent on those expenses, and then from there pass that information on to your tax preparer.
I have a client that does that, and I love the person. Super great guy. We have no qualms about fees. He has a business filing and a personal filing. He pays me $2,000.
Yeah, oh my
That's
God.
actually not terrible.
No, not really. I mean,
Yeah,
he doesn't
for
have
two
it's not
returns.
that long.
Yeah.
Yeah.
I guess if you're making enough money.
Yeah.
I'm not planning on paying you $2K, Ernest.
Well, I don't think you go through your credit card and your bank statements.
Yeah. Yeah. So like we've talked about subscriptions to other people already. Now, what are some other common content creator business expenses that you've come across, Galen? And then here, this will be a little mini game. Galen, you can list them. Ernest, you can check them, see if he's actually right or not.
Okay. Well, hold on. I can do this. So reverse name that too.
Yes, reverse name that too. Yeah.
The biggest one that I think a lot of people need to remember is games and things in games that they are playing mostly on stream, or at least initially on stream, and that help them like forward their business. So buying the game, I'm sure Ninja writes off all the skins that he buys if Epic doesn't give them to them for free. Those kinds of things would be the big one first. Yeah, exactly. Loco hit another one, which is big. Giveaways that are for community building, where like, here, I'll give a plug to her. Loco, or Team Catalyst, but I think it's Loco, is giving away a Switch, which, I mean, hey, who doesn't want a Switch? They're awesome. But that is a business expense because it's community building. And in the process of doing that giveaway, she's getting people to follow her channel, follow her on Twitter, engage with her community a bit. So that's definitely one. Other big business expenses. We mentioned travel, which I say is a big one. Conferences, just in general, even potentially drinks at conferences, although only partially. Microphones would be like new equipment would be, and you'd have to remember that. Things like utilities. If you're living in an apartment, you can theoretically have like a portion of your utilities go out as a fee. That one you have to be a little more careful about. That one I would do primarily if I was working with someone like Ernest and had them double check it for me. I don't know. I feel like that one gets iffier. What do you think, Ernest? Like the internet and utilities?
Internet,
if you're at home?
I have no problem taking 100% of it.
Okay.
Just because it is so vital, and I can make the argument you would not have it if not for streaming. It's a little aggressive, but I think there's an argument to be made.
That a streamer would have no internet if they were not streaming.
Well, and so when it comes down to those aggressive things like that, I talk about exposure. And so how important in terms of a percentage would you guys say the internet expense is to a streamer?
Oh, I mean, it's everything. They literally cannot operate without it.
No, he's getting like how much does your internet utility cost compare against?
Yeah, Fair enough. Okay, yeah, gotcha.
If it's, like, let's say at most $200 a month, then
Yeah.
I'd be surprised if it was more than 10%, right?
Mm-hmm. So definitely like the liability exposure piece of it. Another one that I think would be interesting expense-wise that maybe I don't know if we've hit on yet is if you hire someone to like make YouTube videos for you, right? Just take your unedited VOD, edit it, put it on YouTube. Some of my clients have phenomenal YouTube content that they pay an editor to do. The editor does a great job of it. They save them time, and they cost less than they're bringing in. That's one that I think people often forget.
Oh, I would do that one every day of the week. Yeah.
Mm-hmm.
Yes.
That one's easy. Yeah.
So my quick rant, let's see. I would say anything you pay directly because of because you are a streamer, you pay for. So computers, any equipment like Loco was saying, microphones, PC parts. If you buy a second PC, like a low end one, because you're worried your other one's going to die and you want to be able to not miss a stream because of any issue, that's an expense in some form or fashion. I've had this argument. I think content creators, and this is personal professional opinion, 100% of their phone. And the reason is because, so let's talk about your average full-time content creator or streamer. You stream anywhere from 6 to 8 hours a day. Let's call it average, 6 days a week. Okay? You get off stream, you take a break to decompress, and then you're watching TV. And what are you doing on your phone while you're watching TV? Or
Twitter.
Your Twitter. You're managing all of your social media platforms. You're managing your own probably Discord. And so I would argue, that is a completely, tied to your business, right? Now, I'm not saying you wouldn't have a phone, but that's the benefit of having a business, right? And that's some of that aggressive nature. At a minimum, I think you should be taking half of it. You like split it, like, okay, I don't want to be too aggressive. I have clients that want to be very conservative in their approach. They want no scrutiny at all. And I say, look, we can take 50% of your phone. I have no qualms doing that because, number one, low exposure. I've gone through IRS audits, and that's not something they look at. What they're going to look at is, hey, you say you spent $20,000 on one big expense here. What is it? I bought, 200-inch TV, and it's part of my streaming activity. That's a harder argument for me to make. It's a lot tougher. And also, we're talking 20,000. Assume average tax bracket for self-employed individual, so call it 30%. That's a big exposure. That's an easy win for the IRS. I don't have to, it's kind of the nuance of preparing a return. Part of it is fact, and some of it is art, in that there's this gray area of, well, what's ordinary and necessary. And there is no guidance on this because I'm not aware of a streamer being audited. Then Galen hit on it, travel. So you go to TwitchCon, you go to a PAX event, you go to South by Southwest, your airfare, your hotel room, all of that is an expense. Galen also hit on video editing. What if you pay your artists for your emotes, your overlays, other expenses? I would even argue if you buy a game to play off stream to see if you think it would be fun for you to play and you think your community would dig it, and you play it and you end up not liking it, but you're not really sure and you miss the Steam return window, that's just a failed business expense, right? It doesn't necessarily have to generate revenue, but it's just one of those things where you were researching it and it just didn't work out. I would argue, another argument I would make, if you have stuff in the background, right, and it's part of your community, that's, a business expense, right? It's set design. Because you're doing this weird thing of both community management and community building and show production. And so if you go into it with that type of mindset, you'll kind of think well, if I pay someone to edit my videos, or there are these gray areas where you're probably leaving money on the table by not taking them, right? Think of it this way: I'm taking this expense. What would to Joel? I love that point of what would I argue to an IRS agent or a judge about the expense.
Yes. And I think that's exactly it, right? Like, I think to me, it's pretty funny that you can kind of see like a night and day Ernest here, right? So when it came to income, right, determining your income, Ernest was very conservative when it came to excluding something from your income.
Absolutely.
But then when it came to expenses, he's like, deduct the shit out of everything, right? So, but just to paraphrase him, but and that's pretty much it, right? You can be aggressive. Choose where to be aggressive. First of all, that's just smart tax filing. Second, and then this is when you're deducting expenses, as long as you can make a logical argument that you think the IRS will take, right? There's a gamble there, right? If the IRS doesn't take it, then you have to pay for it. You may have to pay penalties and interest and whatever, right? Mm-hmm. You probably would have had to hire somebody like me or Ernest to help defend you in front of tax court, saying why this argument was made, whatever, right? But that's kind of like if you think it's plausible, and there's a certain amount of like, well, do you think this will fly under the IRS radar, or do you think they'll actually kind of get away with? They'll actually look at this. That's another piece of that argument, right? But
I call it grinding on the edges. So think of it this way, and I truly mean this. You file a return and you got this first position, the first draft, and you owe $15,000. And I go through it, or you go through it, and you think of other stuff, and you end up finding another what you think are $5,000 in valid business expenses, right? You end up moving your liability down from $15,000 to maybe $13,000. Now, I'm not scoffing at $2,000. I'm not doing that, nor am I saying just willy-nilly create $5,000 in expenses that don't exist. What I'm saying is, look at how you spent your money. You're probably spending more on streaming than you actually think you are.
Yeah.
And
there was a question that I got that this reminds me of that I answered in something else, but it bears repeating here. It also doesn't make sense to spend $1 to save 30 cents in taxes.
Oh, yep.
No.
Yep.
Yeah.
So don't spend if you aren't going to use it for the business.
Yeah.
But if you are already spending to use on the business, make damn sure you track it.
Yeah. And so, that I was going to get to the financial planner aspect of it, right? So that's important also, like, you're not, at the end of the day, when you're spending that money, you don't have that money for your whatever other purposes, right? So this is still expenses that you've already incurred or that you are feasibly going to incur. Don't go out looking for and there are different caveats for this, right? So if someone had brought up earlier, what if I'm just starting my business? Well, yeah, when you're starting your business, most likely you're going to be at a loss. And that's a little bit different than you have to pay a lot more expenses in the very beginning than you actually will incur, right? But that's still, the long run, you still want a successful business. It doesn't make sense to have a losing business for years on end, right? One, that's not going to fly.
And that's a tease because it may not be a thing you get to do.
Yeah, exactly, right? So we're going to get into this later also. But so if anyone else has questions about expenses, please go ahead. There's both the thread that Old School Gentleman has been so graciously posting periodically in chat that you can go ahead and respond to. Otherwise, we do have a Discord. You can always link to us if you don't want your question to be out in the internet, on Twitter, on social media for everybody to see. You can go ahead and DM it to me. It's fine. Also, you can go ahead and ask us on the StreamerSquare Discord, excuse me. But let's kind of move past the expenses part of it, because as Ernest mentioned earlier, there's no way the IRS can
categorize everything.
Categorize every possible expenditure or deductible expense. In the same way, there's no way we could even discuss every single possible expense for a content creator.
I think there is one interesting thing that we haven't quite touched on that is an easy, Ernest explains it in 10 seconds, we move on. How do you categorize a game that a company gives you? How do you categorize non-cash compensation?
10 seconds.
Yeah. Now you're just being a troll.
Technically, you're supposed to pick that up as income.
Yes.
And that's it.
Yeah. Good luck determining the fair market value. Well, I guess you could just go look on Steam and how much that game was.
Yeah.
Right? Yeah.
Yeah.
I mean, realistically, what you should look at is if you're getting one of my things is if you're getting a game for free to stream it, and that's all that you're getting from them, you should look at does it count? How much would you normally charge for something like that, right? How much would you charge for the level of exposure you're giving that developer for streaming their game? But if it's just straight up the game as compensation as a part of the package, make sure you include that because the company should be.
I know. Okay, so all of this stuff is the long tangent of this is all of this stuff is pretty nebulous for content creators because it is a very content creation, especially on Twitch, is still a very rapidly developing area. And I can guarantee you that the IRS is still figuring out how to deal with that, right? On the same side, game developers are still trying to figure out how to deal with influencer relations, let alone like any kind of marketing department. So there's still going to be a lot of changes coming from both the IRS and both the FTC and whatnot, what have you, regarding how all this stuff plays out. In the meantime, the best way to play it safe is what we were talking about. Think of what the IRS would be looking at. How likely would they accept your argument for both income and for expenses? We will actually, this is a good time to kind of plug next week's episode because we are continuing with tax month. If Ernest is able to join us, that's great, but that's actually really getting into tax season, so he's probably going to be very swamped.
I was going to say.
Yeah, he's probably going to be dealing with some of the people in chat who are hiring him.
Ernest has already given you guys like $1,000 worth of his time, given that it's a month till tax season.
Well, it's a nice break. I'll probably, like, after this, I'm going to go, like, decompress and then, like, right back to preparing returns and sales and all that fun stuff.
But next week, we're going to be starting to talk about some best practices or so actual usable tips for you when it comes to how do I figure out, like, how do I keep track of all my expenses? Where should I, record keeping, all that kind of stuff, right? So today we're talking about the conceptual stuff. So meaning like what needs to be included, what are things that you have to be aware of. And then next week, best practice will also include how do I talk to a guy like Ernest, right? Like figuring out my CPAs and
very nicely,
very patiently, right? Especially the closer that gets to April 17th. One area I did want to get in touch on first, because I know that we have some creatives in chat. And while we have you here, Ernest, cost of goods sold for people who are creating prints, selling prints, paintings, what have you, everything else, like, for those of you who are creative Twitch streamers, this applies for you because cost of goods sold is it's not really niche, but it only applies to people who are actually selling goods and manufacturing goods, right? So
physical goods.
Yes, physical goods, right? This is an instance where our second motto of "you are your goods" does not apply because you don't sell yourself. There is no cost of goods sold when it comes to selling you as your own.
You don't get to count the cost of keeping yourself fed.
This is your
warm.
Prints, your paintings, your crafted goods, etc. What should they do besides really hire a CPA to help them do it to keep track of inventory? But then, what should they do, Ernest, when it comes to their tax returns?
So, cost of goods sold, conceptually. Essentially what that is that's the cost of making the good, right? So if you buy, if you're making a painting, the canvas itself, depending on how you go through brushes, the paint, those are the cost of goods sold. So those all get totaled, and then it's a piece of inventory. Now likely it's a commissioned painting, I would think. So you're going to turn it around and it's immediately going to be sold. So let's say, you spend $25 on various materials and supplies to make a painting. That would then be the cost of goods sold. You turn around and sell that on 100. And so therefore that equals, a 75 net. I see a good question in chat. I do have like a Word doc and I've got the Twitter open as well for the questions that we'll get to at the end. But skill and time spent on the artwork. So you can't do that because, number one, you're not actually spending any cash money. There's no such thing as sweat equity in terms of an expense. And also think of it this way conceptually. Say you would have paid yourself, the skill and time, $25 for it, right? Well, okay, fine. You get the expense, but then also that's income to you. So it's still kind of a net zero impact, right? So that actually doesn't kind of get you anywhere ahead of the tax game.
If you paid somebody else to do that as part of your cost of goods sold, that's what we call labor costs of the cost of goods sold. So let's say you're making a painting, you paid somebody else to put the canvas together for you, right? That you can include in your cost of goods sold. But your own sweat equity, as Ernest put it, is not allowed because that's all factored in as your income, and then you're getting taxed on your income and whatnot. Because the same way, if Ernest was making a painting and Ernest paid me $50 out of his whole total $250 to commission for that canvas, I have to deduct that $50 as my own, or I have to report that $50 as my own income. It's just a matter of making sure, like, is that income getting reported to the IRS somewhere, right? If it's getting reported to the IRS somewhere, then you can deduct it unless it's your own stuff, right? But that's probably, like, cost of goods sold is definitely an area that applies to some people. For the most part, really do hire a CPA to help you with that. In my own business outside of the Twitch area, we definitely hire a CPA to help us do with that kind of stuff. But those and we'll share our contact information later if you want to get in touch with us to figure out how you can kind of deal with some of those stuff. Really quickly, lastly, sorry, I said cost of goods sold was going to be last, but I lied. This is going to be last. All right. So how would you make the argument, Ernest, for all like your streaming rig and your like monitors, computers, all that kind of stuff? Because some of these are really high dollar items. Would you make the argument that those have to be capital expenses rather than, you know, when we're dealing with a depreciation schedule and everything else, then as opposed to just like a strict business expense that you do on 1 year?
So let's explain what capitalized expenses are first. So what a capitalized expense means is that it's a major acquisition related to the stream. So traditional business model would be, I'm in construction, I buy a work truck for my job foreman and
a bulldozer.
You know, that bulldozer that costs, you know, $50,000. Well, you don't get to recognize the full benefit of that in the first year, typically. Now, if you're in an income position, by that I mean you're showing a profit, there's some tax code rules that will allow you to recapture all of that value. But what happens is that bulldozer gets treated separately, and it falls under a whole different rule set. Kind of a general rule of thumb I have is that if it's over $1,000, I will capitalize it. Mm-hmm. So, for example, if I buy, you know, a major PC, then I will capitalize it. But because of the new law changes where all equipment gets the bonus, the depreciation rule, I can see a reason for just going forward now, especially this change. This is applicable to fourth quarter 2017, actually.
Oh, okay.
So any new equipment that you would consider capitalizable gets 100% of the bonus depreciation. So just to keep it clean and simple on your return is I would just pick it up as an expense because it's 6 one way, half a dozen the other. So that's kind of a nuanced reporting issue, because like if you sold it, well, that would still be income and you wouldn't have any depreciation. Like it would all be ordinary anyway. So yeah, there are all these like nuanced tax things, but I would say as a general rule, if it's over $1,000 for the first 9 months of 2017, you should probably capitalize it. If it's the fourth quarter of 2017 going forward for the next few years, assuming the tax law stays as is, then go ahead and expense it. You're not in too much jeopardy there. And then if you're buying anything, like you're buying that 10K Origin PC, you should probably capitalize that for sure.
I would say anything over 5K, probably, right?
Yeah, that's a good line, and that's a good best practice.
Yeah,
you know, bright line, I'd say.
Anything, and when we're talking like high dollar, because you know, construction's a good example because pretty much anything that you have to buy from construction is going to cost you over $10,000, right? So
restaurant equipment, that kind of stuff
restaurant
too.
Equipment, so like and all that, you wouldn't believe restaurant equipment. So side note, my other side business is a restaurant. You know how much a commercial ice machine costs? $1,500, right? So it's just like the only thing it does is produce ice, right? I can just go. Right. So like, or like,
this is dumb.
Or maybe it's not a good example, especially for someone living in Vegas, right? But then, or like a commercial dishwasher. Sorry, I didn't mean to, Ernest, to put out there. But anyway, so like all that stuff is commercial equipment generally will cost a lot, right? Some of it is just commercial upcharge, some of it is whatever, right? But like if you're going to use this equipment in more than 3 years, if you think this equipment is going to be in your use for your business for more than 3 years generally, or like it's got $5,000 plus, capitalize it.
Yep.
But now when it comes to,
that's a great point too.
Yeah.
So no, you just got the gears turning, because you could argue the severity of use put on a PC by a streamer, that it does not have a long-lived life.
No, they burn through those things.
Yeah, that's an interesting point. Sorry,
this is stuff that we're familiar with, taxes and Twitch, and this stuff still questions us. Now imagine that you're someone that's not familiar with Twitch at all, and then imagine what they're going through in their head.
Because a PC is normally a 7-year depreciation schedule, something like that, right?
I take them as 5.
Yeah, 5.
But
even so, if you're a streamer, your PC is not going to last you 5 years if you're a full-time streamer. Yeah. But that's what I'm saying.
Yeah.
That one I think you could pretty easily argue just on current experience.
Yeah, and I think like that's Cap brings up a pretty interesting question that we'll talk about at the end of, are you deducting the aggregate, or are you making a capital expense, or so we'll get to that at the end. So, but before we get to that, now that we've talked a little bit about both the two major aspects of your taxes, right? So income and expenses. Actually, Galen, I think a good future topic for our tax month will also be, because this is, remember first, this is all still business side, right? This is your brain, your business, which is still, I mean, it makes sense that we start out with business side, but lucky you, content creator, self-employed individual, small business owner, you get to deal all of this. After you get that little number at the end, then you get to deal with the personal side, all of the actual 1040 stuff, right? So this is only half of your process, right? Now, but part of that also includes like, well, if you are, and someone brought this up earlier, I think this was a question that's also within the question thread, quarterly filings. Like as a self-employed individual, what are quarterly filings? How do you do them? Why should you do them?
How about you, Gally? You want to take this one?
Quarterly filings are a pain, and you should do them quarterly, and they're a smart idea to do.
Yes.
Done.
So they're really easy to do. So when you do a filing, you don't file anything. You don't give income. You don't give expenses. All you're really doing is paying as you go, right? There's a lot of tax sayings, but one of the common ones is pay now or pay later. And what that is in reference to is you either pay your tax now or you pay it later. But at some point, you're going to pay the tax. Yeah. So what a quarterly filing does is you basically are saying, look, this is what I estimate my total tax for the year to be $8,000. I'm going to pay $2,000 with this quarterly filing. And you can do that on a Form 1040 ES, which stands for estimated, or you can go to the IRS website, irs.gov/payments. And if you're in a state that has state income tax, a lot of states allow you to do it online as well. Very straightforward. And the reason to do it is for that very reason that Galen kind of jokingly alluded to, was you don't take as big a hit come this April 17th, right?
Yeah.
And I have some clients, it's really a business management question. Mm-hmm. Would you rather have the cash in hand for any unknown expense and pay a little penalty and interest? It's typically not too bad. It depends on how much you're owing. Yeah. Or would you rather get a refund? I have some people that overpay during the year and get a refund back because they want the peace of mind, and they view it as and Galen's going to jump on me, they view it as a way of saving.
Hey, there's a value to peace of mind. There's a significant value to peace of mind.
Oh, there is. No, there definitely is.
Yeah. It's a matter of what you want to do. Yeah. And I have some people that split the difference. Like what I'll do is I'll pay a little bit and then I'll pay the rest of it come April when I actually file. Yeah. My preference, and there's no right or wrong answer. You do pay penalty and interest, which can be, at most.
It's not huge. Yeah.
It's not huge. Like we're talking, I've seen 2,000, but that's on $100,000. Yeah, that's on $100,000 tax bill. Yeah. That's not, that's not a big deal in terms of what you're paying out, right? Yeah. And you had, Galen, you're a financial planner. Yeah. $100,000 in your hand over the course of the year. Is that worth $2,000?
Usually.
Usually.
Depends on the return you're getting, right?
Like,
Now we're talking about all kinds of stuff. Yeah.
So good.
Yeah.
He still answered me with a, it depends.
Yeah.
It's incredible.
It's in his blood, man. We're getting those. We're getting those shirts made. We're going to get shirts made that says it depends, and then after that, I'm going to try to get us a Depends sponsorship. I'll wear the damn Depends on camera.
I know
if we can.
you guys are going to
Oh, no one wants to see that.
I'm going to TwitchCon.
Yeah.
I'm totally, when I see you guys, like, hey guys, good to see you. I'm going to be in the It Depends t-shirt.
Yeah, that'd be so cool if we get to TwitchCon and there's actually like a group of people wearing It Depends that shows up on panels. And then,
You guys are
Joel, you dreamer.
You guys are total dorks.
imagine if they're wearing It Depends shirts and Depends branded underwear for our sponsorship. Oh yeah, that's big time.
Listen, you know what? You keep those things private. Those preferences of yours, you keep those private, please.
Hey, talking about non-endemic sponsorships here, right? Anyway,
Yeah.
okay, back to the topic. So, Ernest is completely right. You pay now or you pay later. Pay later just means usually you have your penalty and interest on it. How much is that penalty and interest worth to you, right? And that was the question that you get to Galen. And that kind of goes into your determination of what's important to you. Do you want peace of mind? For a lot of people, and it's a very valid concern, you simply don't have the means to pay it now or to pay it quarterly, right? But just know that if you don't have the means to now, it's going to be even more painful come April next year when you have to pay all of it at once, right? So that's it.
It's very tough for content creators because from my working with them, there's this weird, and multiple streamers have told me this, there's this weird kind of seasonality with kind of the cash inflows. And I may have this backwards, but apparently like summer is really good in terms of cash inflow, but then the fall is bad. And so you're in this constant struggle of trying to project forward as to what it should be. I would say kind of the easiest way to do this is look what you paid last year and quarter it. And unless there's a big change, like, oh yeah, low key, I actually know Drake and he wants to come on, then you're fine. You're actually fine. Like quarter last year's liability, you should be good and cover more or less what you're gonna owe.
Yeah.
Because there's normally, in my experience, like a natural growth curve to kind of a person's stream, and it goes up, 10, 15%, unless something weird happens and something pops for them, or they find this new avenue and there's that big sea change. But for the most part, it's fairly consistent as long as they're staying on the grind.
Yeah, and I would argue if that's your experience, if you get that growth in the summer, pay your quarterlies, right? Because especially April 15th always comes after Q1, which Q1 is usually quarter one for those. That's the holiday time. That's always pretty tough on content creators, right? Because you're dealing with people that are just coming off the holiday season and their holiday spending. People are back in school, which is sometimes usually affects your viewership, right? That's at the very beginning of con season, so you have all of these other expenditures going on that you need to purchase hotels and
it's when everyone's doing their charity drives and stuff like that, which tends to it's for the people who are doing those kinds of things, tends to tap out their communities for ways that they might otherwise do support.
Exactly.
Yeah, bullet point. Joel's point was, in summer, you have the cash in hand, make a quarterly payment so that you're not hitting, you have the cash in hand, you're not getting a big cash hit in April when you don't have the money. And then he's talking really cash flow management, business management. Yes. I think. I don't mean to put words in your mouth.
No, yeah, but that's exactly it, right? And because this show is, and you can kind of tell now, so we all have our respective areas of profession and strength, right, and an interest. But even as an attorney, when I deal with clients, I always tell them the same thing. This may be what it is inside a legal vacuum, but within the legal vacuum very rarely mirrors the actual real world. Usually, a lot of times, it's actually in opposites with the real world, right? So I noticed that Button Mash Vixen works in compliance, right? You can do everything theoretically possible to make sure you're in compliance, and that might make your attorney really happy, but that might make your business manager really unhappy because it costs a lot of money to make sure you're in compliance, right? So kind of a part of it is making sure, does this make business sense in addition to being legal sense, right? Because when we talk about liability issues, and that's still when we discuss that's still a kind of a business sense thing at the end, because you don't want to get sued for copyright infringement because that's going to cost you a lot, right? So anytime you get into court for anything, it's going to cost you a lot. So that's why a lot of times compliance matters, because you're saving yourself from even bigger expenditures down the line. But when it comes to advice that we give here, also, we're still looking at it kind of like a 360 approach, if you will, right? So we want to look at it from, does this make sense legally, but does it also make sense financially? Does it make sense from a public perspective? Does it make sense from your actual community building perspective, right? And that's kind of the stuff that the resources that are important for us to share, and why we do this stuff on StreamerSquare, and why also the others, also Stream Team, why they discuss things like why it's important to know how to deal with sponsors and how to deal with community guidelines, right? Because you can just be blowing up like ninja levels on Twitch, but if you're getting your channel banned for some reason, then what the good is that going to do you? Right? Yeah.
It's all right.
Okay. All right.
Got a cough.
Okay. But so now kind of before we get into questions and wrapping up this initial introduction to taxes and the basics of tax, now that we've told you how to figure out what you need to pay, actually paying it and actually filing for that stuff. Ernest, what are your recommendations? Galen, also, what are your recommendations when it comes to actually filing for all of your tax returns?
So I would say, if you don't want to pay a professional, you can do it yourself. Your answer, honestly, I'm not going to like the way you prepare it. Like, so in other words, I've seen someone who's self-prepared and I've gotten the return, and just, like a writer, I don't like the way it's formatted. I don't like certain things, but the underlying answer will get you where you need to be. I would say any of the free services that, TurboTax, TaxSlayer, those are all fine. My personal preference, and you may not want to pay it, is pay kind of for the software package, because it's been a long time since I've used them, so I'm not aware of the differences between them. But the questionnaire wizard that kind of goes through those, in my opinion, are very good. And as long as you're taking kind of the information we've provided and other resources that you have available, you'll get where you need to get. And they'll walk you through it. They're very good at, getting you to the end result answer. If you want to use a professional, that's another option. I'm still probably taking a few clients. I don't want to plug too much.
Every third day I message Ernest, do you still have capacity? Do you still have capacity? I had someone else reach out to me, and I don't do taxes.
Yeah. But it's one of those things where, you may not want to pay those fees. You may not have the cash. It may not make sense. I had a conversation with someone, because I'm not interested to just charge people. And I think you guys are the same way. It's like, look, you don't have the income for this to make sense. You should pick up a small loss, W-2s. It's all pretty straightforward. I'll gladly do it if you want to pay me, because I'm going to, charge you the min fee, but that's, the realized rate on me for that is going to be super high.
Yeah. My business manager thinks I'm an idiot for the amount of stuff that I give away for free.
You're putting out good in the world, Galen.
Yeah.
Don't let anyone tell you
you're helping shape the industry. You're helping make sure people are doing things correctly, right?
Pro tip, my business manager is my wife.
Oh. Well, all right. Here's another, for all of you married people or soon-to-be married people here. Your wife's always going to tell you you're doing things stupidly, and it's just in your best interest to agree. Okay. But, yes, for actually filing, let's just use a game as an analogy, right? If you really want to go out there and do it, a pen and paper, no software whatsoever, that's kind of like diving into a game with no tutorial, right? Yes.
Yeah, hold on. Joel, I have to stop you. Please don't do that.
Yeah, please don't do that.
Closing my eyes. No, I had someone, super nice person, and I'm not. They make board games, right?
Yeah.
And they sent me their returns, and I'm not sure how they did it, but they all came in the fillable PDFs, and they were all separate. And I was thinking, like, my guy, did you actually go through the PDFs and put together a return? And no, use the software.
Yeah.
100%.
Yeah.
Do not try to do the fillable forms on the IRS. Do not. No. Sorry. I mean, I know you're going but do not do pen and paper filings.
Yeah.
If it doesn't accept it, don't do it. Because if you ever end up using a professional, they will
honestly,
be like, what is this?
If I were an IRS agent and someone sent me in a hand-filled form, that would make me want to audit them more. I'd be like, you know what?
Just
You
for the heck of
asshole.
it, yeah.
Well, here's
Making
the thing with
me deal with this shit.
Well,
that. You joke, but
yeah, there's
that
some,
gets,
yeah,
that gets eyes on the return.
yeah. That's
Mhm.
a legit.
As a
There's,
professional, I hate that because I want it automatically processed by the system,
Exactly.
so no one looks at it.
yeah, because well,
Yeah.
think about it this way: like if they see that you did this pen and paper, chances are their thinking is chances are they didn't do it correctly, right? So they're
Right.
going to audit that, right?
Yep.
And I think that's again, like that was a think about this. If taxes, filing taxes was Dark Souls, and just think about this, like Dark Souls on the most absolutely nightmarish level times 10, right? And you going in without a tutorial, yeah, just don't do it. Even
What
most
you're saying is
yeah.
filing your taxes is the Dark Souls of business management.
Pretty much, yeah, right. So, but then like, and I credit Button Mash Vixen for that, right? So, but my point is that also like a lot of even TurboTax, I think they let you do the federal filing for free, right? So even the software is out there to let you do it for free. At the very least, do the software because the software is pretty. I think it's like what $15 maybe for state if.
I don't think it's not too pricey. It's not too.
It's boshy.
Yeah,
There you go.
If you're on the high side, for like, because content creators, they have to do Schedule C's and self-employed business stuff, so that might be a little bit more if you're trying to maximize your deductions there. Let's just say software high side $100, right? I would still say that's a valuable.
Well, and if you do it with TurboTax, they then, or if you do it with like, through the TurboTax filing, they then give you QuickBooks for free or included. And then you have QuickBooks. Like they give you QuickBooks self-employed if you file via TurboTax.
That's a strong value add, as they like to say in the business.
Yeah. And then, so the other approach then is to.
That's a good point too.
Yeah.
Is hire a professional for a year, kind of use it like you do with a physical trainer.
Yeah.
Right?
Mm-hmm.
And get an idea of how they do it and what they do. And then maybe you take the dive yourself, like I could do this.
Mm-hmm.
Yeah. I think so. Like definitely, if we're talking tiers, then right. So the first one is software. Second one is probably you do like a mass market tax preparer, like we were talking about H&R Block, Jackson Hugh, or something like that, right? So the reason I say that those may not necessarily be the best option is because a lot of those tax preparers, they just go through a really quick 2-week crash course, right?
And I'm not begrudging any of those people, but oftentimes it's a second gig for them.
Mm-hmm.
So they have like a main gig of being a plumber, or there's teacher and they want to make money on the side, and it's not their main focus. So it's not their background. Like Joel said, they go through a quick 2-week, maybe a month, learn the software, learn key questions they should ask, and they're not necessarily tailor fit for you as a content creator.
Yeah. So, and then someone like Ernest is going to be your highest side. They're going to charge you, not necessarily actually charge you more than H&R Block, because sometimes H&R Block really adds up anyway. But at least you'll know you're getting it done correctly, right? Or at least someone that understands your industry also. So those are your filing options. Really, it's up to you. I'm personal experience, the way I've done it, I used to do TurboTax sometimes. Once I started getting into business ownership, always CPA, right? And the other reason I want a CPA is because they're also audit defense, right? Somebody else filed my returns, so it's like the IRS generally speaking looking at like, okay, it's not someone self-filing, even though I probably could file it on my own. I still want somebody else there to be my kind of like teammate or co-op partner, if you will, when it comes to dealing with the taxes.
The value of hiring a CPA professional is that. Well, I don't want to speak for other professionals because some don't do this, and it makes me mad. Is I go through the return, I'm like, hey, this is what you gave me. This looks low. This doesn't look right. Do you have, I had this discussion with a client the other day. I have to make up some numbers so I don't give too much away.
$10 million.
Sure, they made $10 million. That actually works. And no, that works for this scenario because I can do the quick math. They made $10 million, and they, at the end of it, they had netted after expenses $6 million, right? And so I said, hey, this is what your tax bill looks right. Does this make sense? At the end of the year, did you have $6 million in the bank, or did you use $6 million for personal stuff? And the person was like, yeah, I think it makes sense. Let me look through it again. Because there are these questions and tests I can ask that say, like, look, did your business really net this? Or, man, your travel is really high this year. Like it's $30,000. Is that right? Like what happened? What happened during the year? Does this make sense?
How many switches did you give away?
Yeah, something weird. And I know Joel cringes probably a little bit every time like giveaways get mentioned, because that's a whole like separate rule set that they have to concern themselves about. But that's the question, is that, and then, at the end of it, like, okay, this is what it is. I mean, I could probably grind and say like, look, this is kind of, if I was an agent, I'd say like, this return passes, this saves you an extra, couple $100. I would like to think that the service I provide more than pays for itself, kind of in either peace of mind or tax savings.
Yes.
And peace of mind's important. I actually do try and track for clients, especially new ones coming on over the course of their first year working with me, like, did they save more than they paid me? And the answer is generally yes, but I actually try and make a point of tracking that, because it's also a good check for me. Am I charging appropriately? Again, my wife would say no.
You're never paid what you're worth.
Yeah. But it's good on the professional side as well to have that as a double check against yourself. Like, are you doing what you say you're going to do, and are you charging enough for what you do? That kind of thing.
Yeah. Okay. All right. Let's get into the questions now. So I know there were a lot of questions in chat. Again, if you do have questions and you want to make sure you answer them, please go ahead and reply to this thread. I think it's still that thread. Yes. Reply to this thread with your questions so that we can make sure we don't miss them. First question I have here on this chat: is there any good reason to record income throughout the year that will be 1099? I can see why it would be useful for estimating quarterly taxes, but then one has to subtract them back out at the end of the year. Yeah.
Yes, Resorty, do it.
Yes.
And the reason for that is just for business management, not even the tax piece of it, which is also important, but just the business side of, then you know how you're doing. You can have a snapshot view of how business is going. And if you don't have the data to make decisions about your business, what the hell are you doing?
I have a better reason. I doubt this has ever happened, and I'm being serious.
Oh, so it's a better reason, but it's never happened? Okay, go on.
Well, with Twitch, but it depends on your other sponsorships. Say you're expecting a payment, and it doesn't come in, and you lose track of it.
Mm-hmm.
And it gets to the end of the year, and you're looking at it, hey, wait a minute, Razor didn't pay me. I know Twitch, I don't think Twitch has ever missed their payment windows. I could be wrong. But like, say you're working with sponsors, I've heard those circumstances where...
Actually, is Megna in chat? Because he twice now has caught issues with, once with bits payouts being how they were reported, and once with something via PayPal where there was a misreporting of, hey, Grizzly Ben, there was a misreporting of something that he got paid.
Okay.
So that he caught because he'd been tracking it.
Yeah. So to that point, it's not just business management. It's, hey, get your money right, like track your stuff and make sure you're getting paid what you think you should be getting paid, because ultimately we're not at the point where the machines have taken over. There are still people behind systems pushing buttons, and there's human error. I doubt anyone's doing this maliciously. Mistakes happen. Yeah.
And not even just that, like when we talked about the 1099K thresholds before, 20K and 200,000 transactions, that's not going to apply to everybody, right? So you may not actually get a 1099 for what you think you will actually receive. We talked about this earlier with game devs, and it's the same with not even just like, did they pay you accurately, but did they actually send you a 1099? Like the threshold for a 1099 is you have to be, unless you're in certain industries, you have to be $600 or more, right? Yeah. So if they paid you less than $600, they don't owe you a 1099. But that's still something you need to report.
You still need to report it.
So there are both business management reasons, cash flow management reasons, and then also just like the actual tax filing reasons for you to keep track of your income throughout the year. And I think that's a big yes for across the board for us. Second question: can you write off expenses used to start your brand as a new streamer, or do you have to do it afterwards, or is it just a completely lost expense you lose? Yes, you can write off expenses, and this is where we're getting into. We never even got into the hobby loss question.
No, we did not.
But this is where you're getting into business loss versus hobby loss, or like, does your business actually have to make money?
So
go ahead.
On that, so like, I think we've all streamed for fun. I stream for fun every now and then, like when I'm playing a game with friends and like one of us isn't playing, they want to see what we're up to. And it's just gameplay footage, right? Say I made $5 off of that, right? And I guarantee you, I can come up with $5 in expenses to kill off that income. However, what a hobby loss is, meaning this is something I do like on a lark for fun, playing, for friends, right? I'm unable to create a taxable loss from that venture through other expenses because it's a hobby. So in other words, I don't necessarily have to report a net income from that. So I still have to report the income. I don't have to report a gain, a taxable gain from that. And so when it comes to a hobby losses, if you're streaming, and the IRS could make a rule to determine over, you have to show profit, I believe it is 2 of the last 5 years, and then you're in what's known as safe harbor, meaning you're not a hobby. You don't have to fall under that. You can take losses in the other years. Now that's the safe harbor rule. If you're truly doing this to try to make a career out of it and you're in loss positions every year, I would tell you after year 3, you should be doing this anyway, but you should have very solid records showing all of your expenses, all of your income. But if you get to year 3 and then it's a loss, you better go back in those prior years and make sure you've got good records.
Yeah.
But to answer Button Mash Vixen's question, you can take the expenses in the first year. There are these but-fors and except-fors that I'd be concerned about, where if you were in a loss position for 3 years, hey, are you really doing this for a profit or to make money, or is this a hobby of yours?
Yes.
By the way, I like the drenched in Bailey's Vixen. great Twitter.
Okay, but yes, and would you recommend they actually do it your first year?
I would recommend taking it.
Yeah. So it's definitely best just to do it the year you actually incur those losses.
Yes, you always know because that's the only year you can take them. The year you incur the expenses. Now, I will have you know, if you are taking more than probably a $5,000 loss on Schedule C, you start getting under scrutiny. Yeah. Because and that only grows as the loss goes past that $5,000 benchmark. Now, to be clear, I'm not telling you take a $5,000 loss every year, you're good to go. I'm saying, as a business, it's one of those things where you have to be aware of what's actually happening, and just when you cross that threshold, better documentation.
Yes. Yeah. Yeah. And then make sure you have income to kind of take that loss against. Right?
Yep. Yeah, because that they may classify it as startup costs, and you're only allowed to deduct $5,000 in startup costs your first year. The rest gets amortized over 15 years. Yeah, 15.
I don't actually remember the specific number there. Yeah.
And so, like, when I say income, it doesn't have to be stream income, right? It could also be like against your W-2 day job, or it could be against if this is an active business that you're involved in, which if you're doing content creation on your own, it is something you're involved in.
How could it be passive?
Yeah, it's not going to be passive. Right? So, but this is it actually helps you lower your tax bill from your day job. Yeah. Okay. Other question. Next question is this one's related to 501c3s. Do you need to have a name incorporated or registered first before filing your 501c3, or does the 501c3 202 form create the name in one go? I have to double check, but typically 501c3 is a status that you get afterwards. So you need to have an organization first. And when you have an organization, you need to have that name first. You might be able to change the name later on, but generally speaking, it's like you need to have that character first before you decide what class they're going to be in, right? You can't character create and class at the same time in the case of a 501c3 organization. And tax-exempt organizations, which aren't just 501c3s. Like there's some other ones that have different, like for example, the NFL used to be a 501c3 organization, right? So, but like there are different categorizations and purposes that you have to meet before you're a tax exempt organization. And I can post the link in there later in the Discord regarding what some of those corporations might be.
Is you have to be organized, even if you want to be like a C corporation. First, you register with the state, and then you register with the IRS. That's typically the order. They tend to happen in parallel, but the ordering actually is register with the state, then register with the IRS. If you want to form a charitable organization, you have to do a 1023 application. Those are pretty intensive documents. And if you're doing this for some sort of kind of tax planning scheme, keep in mind that you still have to pay yourself something. So typically when you draw the money out of the 501c3 as an officer, that's a salary, and you're not really any further ahead of the game. And those
Yeah.
Not-for-profits get pretty complicated real quick.
Yeah, your organization will have to maybe tax exempt, but you are not. There's no such thing as a tax exempt individual. Although there are some I think some clergy may get some favorable treatment, but they're not wholly tax exempt either.
Yeah.
Clergymen and women, they get, if the church provides them a certain amount for like living, that is not taxable. I forget the amount.
Technically, if you're active duty military on deployment, you are a income tax exempt individual, right? That's what I recall. Active duty military doesn't get taxed on theirs.
Yeah.
During deployment.
Exemptions for.
And you get like hazard pay and shit.
Yeah.
But if you're streaming from Kuwait, good on you.
But that wouldn't even be part of your deployment, right?
Yeah.
Yeah, that's just a crazy ass hypothetical that we're not even going to get into. All right, I think there were some other questions. Does anybody else have any questions now, or if we missed it, please repeat them. Yeah.
I wrote one down in the chat. Someone was asking about. So they do two separate things. They do content creation and they also sell art.
Oh yes, that was a good question. Yeah.
Would I report that separately, or would I combine them? Now this truly is it depends, as they all are. And what I would say is, and this may be more of a question for Joel too, because there's the tax side of it and then there's the legal side of it. You may want to, and all I'll say is you may want to have these entities be separate for legal reasons, but you may not want to for tax reasons. What I would say for simplicity's sake, if there's not a whole lot of activity in the content creation or the art sales, I would say just report it all under one Schedule C. It's going to net to the same effect anyway, unless you're married and the spouse does one and then spouse two does the other. That's the corner case, but reporting it under one is fine. If you broke it out though on two Schedule Cs, that's also fine. Maybe you want to separate that, so should you be audited, you can point to these expenses over here and the expenses on the other side and say like this is this set of data. And have that all kind of nice, clean lines for it. Yeah. That's ideal. That's probably best practice. But I would say if it's very minimal activity with very little income, little expense, what I'm talking is, 5,000 in, 5,000 out, not a lot of volume of transactions as well, you're probably okay combining that on a Schedule C.
Yeah. Is there a limit to how many Schedule Cs you can attach?
No, you can attach. Yeah. I think the software I use does limit it to like 20.
Yeah.
Oh, Jesus.
That should be fairly generous anyway, though. Yeah. So, like, if you do have different lines of business activity, which, I mean, there's some argument to be made that content creation versus streaming are somewhat related. Like, content creation meaning, like sale of crafted goods and that kind of thing. Like, if you're streaming your paintings and then you sell prints of that paintings, there's some argument to be made that they're related business activities. But like,
would you say that's your brand?
That's my brand.
Yeah, it's your brand. Art sales, that's like,
no? I guess so.
Team you up.
But like, let's say if they're like wholly separate, like let's say you run a lemonade stand and then you also stream, but you don't stream your lemonade sales or whatever, right? So those are you probably...
Or say you have a legal practice and a restaurant.
Well, that's getting different because I definitely have split liability for that stuff. Right?
Definitely. Yeah.
But then, and there are legal reasons for as Ernest mentioned earlier. But if you have separate business activities, you can do different Schedule Cs. That helps with record tracking. Just know that either that separate Schedule C, either you're doing it together or you're doing it for a second one, or you're paying a professional to do a second one, which means more costs. Right, but that might help you again with organization, peace of mind, making sure you don't miss anything. Like if you're going through and making sure, well, this is all I had for my lemonade stand, then you make sure you're not missing any expenses for your lemonade stand, and then you go ahead and just do the same process all over for a separate business. Like that does help. And that was a great question, though. I think that's one that a lot of people do are, at least for content creators, it can be a very applicable question.
Well, and like I do. Through my financial planning firm, I also do some contract work for another firm where I'm doing a similar thing to what I would be doing for my own clients, but it's for theirs. And I just run that all through the same business for financial reasons because it's so closely aligned. So if you are, like you're saying, if you're streaming yourself, doing a commission and then selling those commissions, it can be easier to keep it all in one place unless you have some really powerful reason to separate them.
Yeah. And I think that was a good, because that does kind of, this is a little bit of a self-plug, but let's kind of talk about the question you raised earlier, Ernest, the LLC question and separate legal, separating your liability for different entities and stuff like that. LLC for tax purposes, because it gets brought up a lot, and we actually said we're going to pin the QBI discussion, because it's a, I like how Galen's no, or was this Galen's no, or is it Ernest no? I think this might have been Ernest no. It's a big depends in all capital letters, right?
Yep.
So the LLC for tax purposes, it's a big depends, although that depends changes significantly for 2018 tax year, right? Because of the QBI question. What you guys can kind of start off that discussion. What's your take on should you form an LLC for tax purposes?
It depends.
Yeah, it depends.
What does it depend on?
It depends on two things in my mind. So QBI, we actually found out that Schedule Cs will get the deduction. It looks like we're waiting on the actual regs to get published. I just read an article that said, we're supposed to get them in June, July. Doesn't seem likely, so who knows?
In English, what Ernest is saying is that there's still some things up in the air with the new tax law that haven't yet been fully determined, but we'll find out hopefully soon.
I wonder why this. I wonder why there's still questions about a tax law that was rushed to be passed at 2 a.m.
with scribbled notes in the margins.
It truly is not good. I will say, I should have mentioned this at the top. I have so much caffeine in my system that I could probably vibrate through a wall. That's probably why I'm rambling and talking super fast. I do that anyway. But the other thing is this, is if you have partners, it gets a lot more iffy. I would say you should have an LLC if you have a partner, just from a legal standpoint. I'm not an attorney. That's my opinion. But I would say once you start approaching 50, 60,000 net from your streaming, your content creation activities, that is 50, 60,000 after expenses, you really need to start looking at structure as a way to potentially save on employment taxes, something we talked about at the beginning, because that structure can help limit that, but there's extra administrative headache, extra filing headache. And that's why I say the threshold is roughly 50, 60,000, because that's when the cost benefit, as well as additional time into this structure, you start seeing the benefit of it and it starts making sense.
Yeah. So in an ideal world, yes, everybody would have a separate legal identity for their business, right? But then this does make sense for, if you're in a high liability industry, definitely. Far and away, like that threshold is
restaurant, construction, blah blah blah. Yep.
Yeah. If you're in a high liability issue, and when we say liability, it's like how, like for
what's the likelihood of you getting sued?
Yeah, exactly. If you're in a restaurant, if someone's going to come in, or if you have a physical brick and mortar retail space, like if someone's coming in and they slip in your property and then they sue you because of water on the floor or something like that, like chances are you don't have a lot of liability in that regard as a streamer, because no one's coming to your house to watch your stream and they're not going to slip on water on your carpet, right? So that's why the liability issue is a little bit different, and the threshold is what Ernest had mentioned, because now you're looking at anytime you have a separate entity, there's more filing costs, right? You can be anything from the more complicated disregarded entity compared to your own Schedule C, or you can go full on. You have an S corp, you need to file a form 1120, or you have a partnership, you need to file a form 1065, and that's a wholly additional return that was due a month before your regular tax returns are due, and then so now you have 2 filings that you need to pay Ernest for.
AKA 3 days ago.
3 days ago, yes, exactly. So that is the question there. Does the tax potential savings on your self-employment tax, because that's where it is, that's where it's coming from, right? So
correct.
If you're a business owner and you're the only business owner, it doesn't matter who's paying the self-employment tax, because it still comes out of your pocket, right? Because if you're a W-2 employee, half of that's being paid by your employer and you're just getting that benefit. But if you are the employer, then you're still the one paying. You get the benefit, but you're still paying that full 15.6 in one way or another. 15.3, sorry.
0.3.
Yeah.
Yep, 15.3, 7.65.
Yeah. So there are ways that you can kind of save on self-employment tax. The only way you can save on self-employment tax is by categorizing that income as a disbursement,
Or distribution
instead of actual income. Are there any specific? What are the guidelines for categorizing something as a distribution or a disbursement rather than income, Ernest?
So what we tend to do with that is assuming your state allows it, is we do a W-2 at year end.
Yeah.
And so we just recategorize the draws as income to you. The real rules on the other side is what's reasonable compensation for you from the business. Yeah. So it depends, but it's on the business side, not the owner side. Yeah. So it's like, as long as you paid yourself a reasonable wage out of the business, you can draw it all out. The rest of it, all of it. That's completely up to your discretion as a business owner.
But then, so instead, if it's a disbursement or distribution, they're not paying self-employment taxes because it comes out as what, against their capital accounts, or?
Yeah. So the way, so big picture, the way the S corp works is it's known as a pass-through entity, and so in the example, you net $50,000 from your business, your streaming activities. That's reported all under the S corporation, and those earnings are not subject to self-employment taxes. So that you just get to K1. And you pay $50,000 on that. Say year 2 comes along, you keep the $50,000 in a business bank account, and you say, I'm taking a year off. I'm not streaming. I'm not doing anything, whatever. But you draw the $50,000 during the course of the year. You don't pay any tax on that because you already pay tax on that $50,000 in year 1. Mm-hmm. So distributions and income are two different things that can run in parallel, but not necessarily.
Yeah, it gets pretty complicated. Just let's put it that way. It gets pretty complicated. Yeah. But there are some potential savings there. But the biggest thing for a lot of people is the separation of liability, especially if you're getting into a part with partners, right? Definitely, because you don't want to be responsible for your partner's actions, as well as whatever friendly terms you guys might be on.
Use somebody like Joel. Don't use LegalZoom. Don't get a stock operating agreement. It's going to basically say that you're bound to anything your partner says in all likelihood, and then you'll end up screwed.
Yeah. But that's actually, it's a pretty complicated topic. I know we discussed that a little bit on the Nerds at Law show, which is it's another show I do on my own personal channel with another attorney, where we kind of discuss legal issues specifically, not just business, or not business, but really just legal issues only for content creators. But still, there are a lot of questions we might be drawing. We probably should do some sort of a discussion like that in the future on on Your Brain, Your Business also.
Oh yeah, for sure.
Yeah.
But there's a question about, do you need to have proof of revenue from affiliate programs and keep them with the taxes? You don't actually have to prove revenue. As long as you have reported everything that there's a taxable document for and everything in there, you need to show that Amazon paid you or whoever. As long as you've accurately reported your income, that's never been an issue.
You don't need to like put Amazon's affiliate form on your tax return or something.
Yeah.
No.
Put the number in.
We put the number, but not like the physical, or not like you don't have to like scan it and put it on there or something like that.
Yeah, unless like the forms that you need to include with your 1040 will say on their file with your 1040. Usually if you get a W-2, you get like 4 copies, right? It's like a grid, and you get 4 copies. Some of them you have to staple to your tax returns.
Only if there's withholding.
Yes. Yeah.
If there's no federal withholding, you don't actually have to attach anything.
Okay, that I did not know. That's interesting to know. Yeah.
Yep.
All right. Any other questions? I think did we cover everything we wanted to talk about? I know we talked about we're going on 2 hours now. Yeah. I know this. I knew this was going to be a long episode because we have a special guest, and we want to make sure you guys all get your questions answered, and also we want to. There's a lot of different things to kind of.
And I ramble.
About.
I know.
No, we all ramble, right? This is a show of tangents and ramblers.
It is. It is.
But be a alt show quote, like it depends, or show of ramblers and tangents.
Yeah. Yeah. I think that is like we said, this is the start of tax month, right? So because taxes are such a heavy and weighty topic that there's no way we can cover it in a show unless we're doing a marathon stream, right? We might be caffeinated enough for a marathon stream, but we all have a lot of other things that we need to get to. But so that is, we're going to wrap up the show now a little bit, but be tuned for next week, which the next thing is going to be best practices, actual practical advice on what you can do. I mean, we shared quite a lot of practical advice today also, but it'll be, actually figuring out how you can go ahead and track your expenses, going through your credit card statements or your PayPal statements, that kind of thing, determining. That's where Galen really shines because that's his financial planner stuff coming out, right?
Yep.
And we may actually at some point be working on a tax workbook or calculator spreadsheet. just to help people to figure out how exactly, like kind of like a Schedule C or those categories that we saw earlier in the Schedule C, but then in a way to keep track of it.
Ernest, did I ever show you the tax calculator that I have on the site? I forget if you ever.
No, you
went
never
through
showed
that.
it for me because like we just got coffee that morning, and you were
Oh yeah, that's
I was
right.
like, yeah, I built one too.
Yeah. So we could definitely look at like the estimator tool that I have and show how show the kind of difference that it would make when you actually do a good job of tracking your expenses and things like that.
Yeah.
Mhm.
Okay. All right. So where can these wonderful people in chat find you, wonderful gentlemen? We'll start with our esteemed guest, Ernest.
That's just too much hype, too much esteem. You can find me on Twitter. That's probably one of the best ways to reach me because I always have it open. I see the notifications. Have a basic website, nothing that crazy. I got permitted, so I'm typing it in the chat. And then you can find me and Galen also playing PUBG together. We're going to play 1% in duos. And so that's going to be because Galen, can I share the pack you and I have?
What? Sure.
You don't even know.
I want to know this.
Galen and I met at TwitchCon.
Oh.
And like it was before his panel, and I was being my normal like spastic, cock fast kind of self, and he was like really like locked in, nervous about his presentation. He's like, I just want to go somewhere, and I just want to like get in because we were in line and whatever, blah blah blah. And I ran into him somewhere else. Is like, hey, you know what our goal is next TwitchCon? We are going to get invited to all of the parties. That's our only goal. That means like we'll have been successful, right? Because people know who we are. We've added value.
Oh God, I do remember. That was when we were waiting for like an hour and a half on the first day to get in, and my panel was like.
It was right after the keynote.
After the keynote.
Like I do the same thing Galen does when I get nervous for like presenting or something. I get like very quiet and I start like looking around, and I'm very disconnected to the person I'm talking to. And I just kept trying to keep him loose, and he was just like not having it. He was just like, I just want to get inside. I just want to find somewhere quiet. I just want to go over my notes. And he just
Thank goodness we ran into Stella because she is much more believable than me when she walks up somewhere and be like, I belong here. Because that worked great for us when I went with her, but I'm just not as good at that as she is.
That was interesting. That was if you ever do a panel at TwitchCon, I hope you guys don't have one immediately after a keynote, especially if that keynote is running late. Yeah.
Yeah.
So we'll save how I was almost late for my own panel.
Building. It was in a separate building.
Yeah.
Through security twice because I was
day one.
Check it out. Yeah.
Oh, that was awful.
Okay. But okay, so if you guys are you guys gonna stream your PUBG duos or something? I thought you had.
I've literally played the game twice.
Don't you have a toaster for a computer?
It's awful. It's terrible. Yeah. Okay. I play it on like the lowest setting, and yeah.
Those of you that need a financial planner, go talk to Galen so you can get a better computer and play PUBG.
Right. Yeah. Exactly. But order of business one, good enough computer. Nah. For gaming.
Yeah.
It's a CPU. I bought this thing 6.5 years ago, and it was like a okay gaming computer then, and I haven't upgraded the CPU since then.
Or Alienware, if you'd like to sponsor a financial planner.
Right. Maybe you shouldn't laugh at that Depends sponsorship now. Diapers can pay for your gaming PC. Yeah.
You can follow him at let's see what you're at Galen HDEC.
Yep.
Yes.
He also has a great website called Buff Your Finances.
There you go.
A good article on it every week, usually.
Yes.
Very informative.
Writing tomorrow's article tonight, or at least finishing it. I did start it.
I admire the fact that every week he finds a relevant, and I mean this sincerely, a relevant topic with good information.
We should bring this guy on as a guest more.
Yeah, we should.
I mean, no, Joel. I was working, and I heard Joel say the same thing. It's very true that every week you are putting an pen to pad, as it were, and writing something.
Yeah,
it is
shows you how little business I have.
So this is our tax theme. So our tax theme is kind of going right in the middle of our business hygiene theme, which is what our previous episodes were about, and that's about the specific actual practices that you need to do on a regular basis to help you make sure your business is operating in a good shape. And your business being your channel, right? So we're doing tax theme because this is tax month, right? It's a month now from when your filings are due, so we want to make sure it's timely. But after tax month is done, we will go back to our business hygiene themes and discuss more things. And as Ernest said, Galen's business hygiene is something I sincerely hope to emulate because he is just consistent like clockwork when it comes to some of the stuff that he needs to do. But we will, that is where you can find us. I'm Joel, if you can't tell. This is my handles on Twitter and Twitch are all Shang at Law for consistent branding. And then, so now Galen that's his Twitter. Go ahead and follow us. That's probably the easiest way to get in touch with all three of us. And although that should not discourage you from joining the Discord. The Discord is, we are all there in the StreamerSquare Discord. You can feel free to tag us. We actually have our own channel, thanks to Loco, for your brand, your business, and we will post resources and answer any questions you guys might have there. So yeah, we've been doing this for 2 hours and 9 minutes now. Thank you guys for joining us. Thank you for being here. I know it was a very weighted topic and a very heavy topic, but this is just actually the start, right? So as we mentioned, Schedule C, all your business taxes, that's just half, right? Maybe we'll get Ernest on for a future episode, although that's probably getting really close to April 17th to deal with your personal half.
Sundays, usually work. Yeah. I don't know if next Sunday will work, but the one after that, I'm around, and maybe I'll just be really quiet and just like give a thumbs up as I'm working on or something.
That works too. All right. Thank you guys for being here. Thank you for joining us and for your wonderful questions. Please do tune in next week around the same time, 3 p.m. Eastern, 12 p.m. Pacific, for another episode continuing our tax theme month. That's going to be best practices, practical advice for your tax filings. And that'll be Galen and I, and hopefully Ernest also. All right. Thank you. Have a good one, guys.
Have a good day.
You have a good one.
Bye.